Welcome back to Advanedge Consulting AI, where we explore the transformative impact of artificial intelligence on the financial world. Today, we're focusing on a rapidly growing area of finance that's gaining significant attention from investors and regulators alike: sustainable finance and ESG investing. ESG, which stands for environmental, social, and governance, is a framework for evaluating companies based on their performance in these three key areas. As investors increasingly seek to align their portfolios with their values, the demand for reliable and comprehensive ESG data has skyrocketed. However, the complexity and sheer volume of this data present significant challenges. This is where AI comes in, offering powerful tools to analyze ESG factors, identify sustainable investment opportunities, and drive positive change in corporate behavior. The rise of sustainable finance and ESG investing. Sustainable finance is a broad term that encompasses any form of financial service integrating environmental, social, and governance criteria into business or investment decisions. ESG investing is a key component of this, focusing specifically on building investment portfolios that not only generate financial returns, but also contribute to positive societal and environmental outcomes. The growth of ESG investing has been driven by several factors, including increasing awareness of climate change, growing concerns about social inequality, and a greater emphasis on corporate accountability. Investors are no longer just asking, what is the financial return of this investment, but also, what is the impact of this investment on the world? This shift in mindset has created a massive demand for high-quality ESG data and analysis, a demand that traditional methods are struggling to meet. The challenges of ESG data and analysis. One of the biggest hurdles in ESG investing is the nature of the data itself. Unlike financial data, which is largely standardized and quantitative, ESG data is often unstructured, inconsistent, and difficult to compare across companies and industries. Data availability and quality are major issues. While some companies voluntarily report on their ESG performance, this data is often incomplete, self-reported, and not always verified by third parties. Furthermore, there is a lack of standardized reporting frameworks, making it difficult to compare ESG performance on an apples-to-apples basis. Data complexity and volume are also significant challenges. ESG factors encompass a wide range of issues, from carbon emissions and water usage to labor practices and board diversity. The data needed to assess these factors can be found in a variety of sources, including corporate sustainability reports, regulatory filings, news articles, social media, and satellite imagery. Manually collecting and analyzing this vast and diverse dataset is a monumental task. Greenwashing is another major concern. This is the practice of companies making misleading claims about their environmental or social performance to attract investors. Identifying genuine sustainability efforts from mere marketing ploys requires deep analysis and a critical eye, which can be difficult to achieve at scale. How AI is transforming ESG analysis. AI is uniquely suited to address these challenges. Natural language processing, NLP, is one of the most powerful AI tools for ESG analysis. NLP algorithms can analyze vast amounts of unstructured text data from sources like sustainability reports, news articles, and social media to extract relevant ESG information. For example, NLP can identify mentions of a company's carbon emissions reduction targets, analyze sentiment around its labor practices, or detect controversies related to its governance. Machine learning models can then use this data to generate ESG scores and ratings for companies. These models can identify patterns and correlations that might not be apparent to human analysts, providing a more nuanced and data-driven assessment of a company's ESG performance. For example, a machine learning model might find that companies with strong board diversity tend to have better financial performance and lower risk profiles. Alternative data sources are also being leveraged by AI to provide a more comprehensive view of a company's ESG impact. This includes satellite imagery to monitor deforestation or industrial emissions, supply chain data to assess labor practices, and employee reviews from websites like Glassdoor to gauge corporate culture. AI can process these diverse data sources and integrate them into a holistic ESG assessment. Predictive analytics can be used to forecast a company's future ESG performance based on its current practices and historical trends. This can help investors identify companies that are on a positive trajectory and are likely to become sustainability leaders in the future. AI-powered ESG investment strategies. AI is not just improving ESG analysis, it's also enabling new and more sophisticated ESG investment strategies. Thematic ESG Investing 8 is one such strategy. AI can identify companies that are aligned with specific sustainability themes, such as renewable energy, clean water, or sustainable agriculture. This allows investors to build portfolios that are targeted towards specific impact goals. ESG integration is another common strategy, where ESG factors are integrated into the traditional investment analysis process. AI can help automate this process, providing portfolio managers with real-time ESG insights that can inform their investment decisions. For example, an AI system might flag a company with poor governance practices as a potential investment risk, even if its financial performance is strong. Impact investing takes this a step further, focusing on investments that are made with the intention of generating positive, measurable social and environmental impact alongside a financial return. AI can help identify and measure the impact of these investments, providing investors with clear evidence of the positive change their capital is creating. The role of AI in engagement and activism. AI is also empowering investors to engage more effectively with companies on ESG issues. AI-powered engagement platforms, 11, can help investors identify key ESG risks and opportunities for a particular company, and provide them with the data and analysis they need to make a compelling case for change. For example, an investor could use AI-generated data on a company's carbon emissions to advocate for more ambitious climate targets. Proxy voting is another area where AI is making a difference. AI can analyze proxy voting proposals and provide recommendations based on an investor's stated ESG preferences. This can help investors vote in a way that is consistent with their values, even when they hold a large and diverse portfolio of stocks. Challenges and the future of AI and sustainable finance. Despite its immense potential, the use of AI in sustainable finance is not without its challenges. Data quality and bias remain significant concerns. If the data used to train AI models is biased or incomplete, the resulting ESG ratings and recommendations may be flawed. Transparency and explainability 14 are also crucial. Investors need to understand how AI-powered ESG ratings are generated to trust and act on them. The risk of over-reliance on AI 15 is another concern. While AI can provide powerful insights, it should not replace human judgment and critical thinking. A hybrid approach that combines the best of AI and human expertise is likely to be the most effective. Looking ahead, the future of AI and sustainable finance is bright. We can expect to see more sophisticated AI models that can analyze an even wider range of ESG data sources. Greater standardization of ESG data and reporting will also help to improve the accuracy and comparability of AI-powered ESG ratings. The integration of AI with other technologies, such as blockchain, could also help to improve the transparency and traceability of ESG data. AI is playing a pivotal role in the evolution of sustainable finance and ESG investing. By providing powerful tools to analyze complex ESG data, identify sustainable investment opportunities, and engage with companies on critical sustainability issues, AI is helping to create a more sustainable and equitable financial system. At Advanedge Consulting AI, we believe that the combination of AI and sustainable finance has the potential to drive significant positive change in the world. Thank you for joining us today. Don't forget to like, subscribe, and hit the notification bell for more insights into the future of finance and technology.